Warren Buffett's Berkshire Hathaway has outperformed the overall market in 2022, largely due to his holdings in the oil and gas space. The sixth largest holding in his portfolio is Occidental Petroleum, and it's also the #1 oil and gas stock searched by financial pros on Trackstar over the last month. Buffett's been slowly gobbling up shares in what many speculate will become a takeover, and the stock is up a whopping 130% year to date. So is there still time to get in or not? Occidental Petroleum is one of the world's largest oil and gas producers. The firm generated $4.2 billion in free cash flow and retired $4.8 billion in debt during Q2 2022. Warren Buffett built a stake in the company over several months, recently crossing the 20% threshold, and back in August, energy regulators gave Buffett permission to buy up to 50% of the common stock. Occidental has more than doubled its revenues from 2016 to 2021, going from $10.3 billion to $26.3 billion. The firm is on pace to have its best year, as its 12-month trailing revenues currently stand at $33.7 billion, and as you can probably imagine, revenue depends on the oil price. The firm dishes out a 52-cent annual dividend, and additionally it repurchased over 18 million shares through August 1st, 2022. Occidental has $1.3 billion in total cash and $23.4 billion in total debt, which seems quite a mismatch, but it does have enough liquid capital to pay off its short-term liabilities. And looking at valuations, Occidental has a PE gap ratio of 6.5x, which is better than most of its competitors, and relatively cheap compared to the broader market. Moving to profitability, Occidental has a gross profit margin of 66.6%, which is right in line with its competitors. APA is higher at 70.8%, but it is a significantly smaller company by market cap. And also, Occidental boasts a net income margin of 32.6% that trounces its competitors. Furthermore, the firm has an operating margin of 34%. No wonder Warren Buffett is such a large investor in the company. Occidental has $14.7 billion in cash from operations, with only ConocoPhillips, which is twice its size, beating it with $23.6 billion in cash flow. And it's been a great year for oil companies despite the declining overall market. Occidental saw its revenues grow 72.8% year over year, but its competitors have done even better. Even more impressive is Occidental's EBITDA growth of 125%, although Devon Energy experienced 325.9% and ConocoPhillips 190%. In our opinion, this is a 9 out of 10 ranking stock, and given all the geopolitical risk and inflation concerns, investors need exposure to the oil and gas space. Occidental is one of the best companies out there, which is why Warren Buffett has such a significant stake in the firm. We believe the stock will continue to do well for at least another year or two. It's a worthy addition to anyone's portfolio.